Hey guys, welcome to another edition of the Trade Genius podcast. Philip here with Bob Kudla. As always, a lot to unpack on this video. We have to go through where we are currently at with the FTX debacle and its effects on crypto, and really a lot of ties now that we're finding out politically and with different regulators. So it's a real mess. We're going to try to give you an overview of where we're at, and then we'll try to run through some charts and kind of give you a big picture and where you should be looking to or prepare yourself for what might be coming down the road here over the next few weeks. So without further ado, let's get into this video.
Trade Genius.
All right, so Bob, let's dive into kind of what we've been finding out here. And so first thing is that we started seeing these ties come up with different players in the FTX empire. Alameda, which is their investment arm or money market making arm, which did a lot of the market making on FTX, as well as some other, a lot of DeFi investing and things like that. That's basically where this contagion started from, is mistakes on their end. And then Sam basically used clients' funds to plug the hole, unbeknownst to a lot of people, including people in the organization. But her dad, the head of Alameda's CEO, Caroline Ellison, her dad was basically a friend of Gary Gensler at MIT. They worked together, they were colleagues, so there's a connection there. And that's interesting because as we go through this, it would appear that there were meetings and things with FTX where there's very favorable regulations being discussed, such as this conditional no action relief. And so you start to wonder, is the fox guarding the hen house here? There's ties to Goldman Sachs players. CEO of Goldman Sachs and David Solomon met with SBF FTX, which is Sam Bankman-Fried, to help get some regulatory approvals. Again, the Caroline Sullivan's dad, she was the CEO of Alameda. He's there with Gregory Palm, a former top Goldman Sachs lawyer, one of the wealthiest corporate lawyers in the US. So there's a lot of things that are like starting to connect the dots here. And I think as we go on, the fallout from this could be quite substantial. And where I think this is headed is we had basically a huge honeypot of global crypto users, and essentially what ended up happening was funds were being funneled back to a lot of the even Democratic Party candidates and things like that, which Bob, I think you're going to comment on in a little bit. But like here, FTX quietly invested more than $500 million in Sequoia. So all of this, it was like a honeypot for retail to funnel back to all of these, big banks, big money. Here's an example of the big banks being involved, where the Oxy token was a core team of Goldman Sachs, Barclays, JP Morgan, Bank of America, FTX, obviously, and Alameda, right? And it went from $4 to 3 cents now, big pump and dump. You think those guys held that all the way down to 3 cents? No, they got out at the release of that. And then here's also basically where the tentacles go. This is Sam Bankman-Fried and everything that he's invested in and acquisitions. And so the way I look at it is they were funneling a large amount of the crypto market cap into special interest groups, into the big banks, into venture capital firms, which all those guys probably sold out early round shares to these guys and are out. And now you're starting to see the big picture of what was going on here. And Bob, well, you have some insights here on like political ties. What's your take on like things going back to, I think, some Democratic Party players?
Yeah, I want the movie and the book rights to this thing because this is going to be, Netflix is going to make a fortune doing a series on this thing. It's, this is typical, how basically the Democratic Party runs things. I mean, we got an inside baseball look at how people legally launder money and the handshake deals in the back. And, when you talk about sending stuff to these VC firms are all probably left leaning. They turn right around, they supply funding to the Democrats. Gary Gensler was set in there. The thing about Gary Gensler, for me, is that, he was supposed to be in there to provide a framework for safe investing in crypto, and he's in the middle of setting up basically an operation to protect FTX and blow everybody else up in crypto. it appears to me. And I look at it, and the Binance guy is sitting there saying, hey, wait, this guy's trying to put me out of business. And the idiot left the keys to the house, and he handed them to me. So I'm going to take him out before he takes me out. And he took him out.
Yeah.
And now we have all this exposure again on how things, to me, I think this is pretty illegal stuff, highly unusual. I mean, this guy doesn't go to jail. I heard at the very end, Phil, that people in Bahamas were able to get money out before we filed, because they were doubled KYC.
Yep.
So everything's a joke when they do. When a regulator gets involved in an industry, they're there to protect whoever it is that provided them the most dough. And this guy, he provided 35 or 40 million direct to the Democratic Party for this election alone. And my thinking is that, did he use money from people who were giving them their coins to invest? Was that money used illegally to fund a campaign? And does he have to give that money back?
Right.
Does that money have to come back out of the Democratic Party and back into this operation to go back to the investors or to the retail users who had their money? Apparently, I think it was mixed money, right? Isn't that the whole downfall here? He commingled funds. I mean, that's like the classic.
Yes.
That's a classic case of fraud. I know somebody personally that had a business. He commingled funds. He got exposed, and he couldn't put the funds back in fast enough. And boom, SEC took him out, banned for life, no longer able to be an investment manager, nothing. And, this guy's sitting out there in the Bahamas just running an offshore, like you put it, a honeypot campaign. So I think there's more to this. I personally think that it was designed basically to kill crypto for the retail people, and make it toxic. Because look, right away, what did Biden say? We have to regulate crypto now. So it's a daisy chain of, we'll create the problem, then we'll come in and we'll solve it in a way in which basically screws retail over and over again. So that's my view on it, Phil.
Yeah, no, it's some really valid points. And to your point, Bob, so we warned you guys about getting out of FTX.us. They filed for bankruptcy. Here is the notice. I won't read it off. You guys can read it. Interestingly, Sam has stepped down, which is probably expected at this point. And John Ray III has been appointed Chief Executive Officer of the FTX Group. That guy actually was involved in, I think, the Enron bankruptcy proceedings too. So he's got some experience with this. But the interesting thing here is they were, initially Sam was saying his main number one priority was getting users back their funds. And my understanding is, being that he's voluntarily decided to go with Chapter 11 proceedings in the United States for the entire, like most of the entities, that actually brings the venture capital investors to the front of the line. So you had this honeypot, you had this money funneling back, and then these guys get to go to the front of the line and leave everybody else, all the customers, all the retail out to dry, right? Just total scam. So this is, like Bob said, there's a lot more to go on this, and we'll see how this unwinds, and I'm sure we'll be doing a few videos next week as we get more information. But it's actually interesting how deep this goes, both regulatory and politically. It's going to be real interesting to see who survives this debacle, because it's pretty deep, and we'll see. So the next thing I wanted to do is actually head over to the chart. Dollar, taking a look at the top down view, dollar broke down through support. We were looking at 108.60. That failed. Remember, we were in this parabolic support curve. So really, I'm looking at this next level between 104 basically and 105. And I think we could push up in the stock market to there. Normally, that'd be good for crypto. However, crypto's dealing with the FTX fallout. And we thought we would follow along more closely with the Qs, which I think are going to finally probably ring the bell up here toward this 296 area. And then we'll probably look for a potential play to short it and as it rolls over. And I was expecting to ride that up with Bitcoin and crypto. But obviously, you can see this is decoupled to the downside for obvious reasons. And we don't know where this is going to end, guys. So what we then need to do is take a look at, where potentially are we going with Bitcoin in terms of, ranges and things like that. So here we have a chart of Bitcoin, and here's some of the ranges that we're looking at. Was looking for the support down to, 16, low 16s to hold the weekly support. I mean, that has happened. If we zoom in though, What we needed to see was this break back above 17,600, and it's failed to do that. It's coming back down. So I'm actually a little leery going into the weekend because we don't know who's exposed to what. We don't know what further liquidations are coming down the pipe. The weekends are rather illiquid. So, we could push down into this next zone of support, which would be down toward the low 14s on up to 14,775 or so. And that's probably going to bounce too. But if that doesn't hold and we fall through, 14, this 13,880 level, which is 2019's high, comes into play. And if we don't recover that real quick, and it turns into one of these moves, unfortunately, that might open up ranges as low as 6,400. At that point, if that were to happen in some kind of big washout, yeah, you would want to have stink bids down there. You just would, because the risk reward at that point is pretty high. Because remember, coming out of this, once we get out of the bear market and all this other stuff, your major returns with Bitcoin are from these areas. Huge. It just seems like it's never going to end, and the prices go down farther than anybody thinks. But this is where your big returns come from. So we have to play it tactically. We have to be in and out. It's kind of an if-then scenario. If this doesn't hold, then this potentially could be where we go. But if you're dollar cost averaging in here over time, we talk about Bitcoin being able to go to $1 million. None of that's changed, right? We're just in a bear market toward the tail end of a bear market with now you have systemic problems within the crypto space because of bad actors that could potentially wick us out of this move. And that's how Bitcoin usually bottoms, is kind of a violent washout. So we could get potentially a wick, print some pretty low number for a brief moment in time over the span of a few hours, and then that's the bottom of the market. It consolidates like most of these bear markets do, and then we're out of there. So that's kind of a big picture overview. Be careful if you're in altcoins. You need to take a hard look at your projects and make sure they're viable. Otherwise, some of these projects won't make it through this cycle, guys. So just be careful if you are in alt still. Give those things a hard look, and if you're worried about it or if you have questions about it, probably good to go to the sidelines, because we're not done and there's going to be more downside coming. So that's basically what I wanted to cover on that. And then Bob, we're going to be back tomorrow. I think we're going to talk about gold a little bit here.
Yeah, we're going to talk gold and silver. So the dollar's been falling, and since crypto's not cooperating, I think you're going to see money and speculators shift into the gold and silver miners, because it's really going to be the only game in town, and they started to pop. And so I wanted to go over some of those charts that have, I think, broken out long-term bases that I think are going to give us nice returns in that area too. So stay tuned for that, and we'll hit that in the morning.
All right, guys. Thanks for watching. Appreciate the likes and the subscribes. Really helps out our channel a lot. And we'll see you tomorrow. Thanks.
Trade Genius.